Thank you, everybody, for attending our summit and especially for attending my talk today. We're going to talk about how to look at return on investment considerations when looking at ERP investments. My name is George Brown. I'm a board member here with the organizations putting on the summit, and I'm here to talk about 5 topic areas in the agenda. I want to talk a little bit about the continuum of digital transformation within the print industry. I think that's important to look at. I want to talk a little bit about the challenges we see facing printers today when we're talking to printers every day. Talk about industry profitability and drivers. I want to look at this investment hypothesis for an enterprise resource planning project. And we'll use a sample company to do that. And at the end of the presentation today, I want to look at what the economic impact is 12 months post-successful implementation of an ERP project. Now, I say post-successful implementation because, of course, there are many ways that you could have an unsuccessful ERP implementation. Hopefully, by attending the summit, that'll never happen to you, but we're going to look at what happens 12 months after a successful ERP deployment. Now, I'm going to also ask you to think about a question, which is, based on what I present today on the return on investment hypothesis, what decision would you make at the end of this presentation? Would you buy that new printing press or new piece of plant equipment? Or would you actually look at the ERP system to accelerate your growth, right? Now hold that thought, because I know what you're thinking. Like most of us in the print industry, we're thinking we're definitely buying a new piece of equipment. Don't even have to think about it. But I want to at least today examine what the benefits are if we don't do that, right? If we look at it from a different point of view. Now, the hypothetical printer that we're going to deal with today is a printer I named myself. I call it compete printing because this printing business is very competitive, right? We all know that. It's a mid-sized printer. It's not the biggest. It's not the smallest $25 million cut sheet printer. And it's got an operating profit, which I took directly from the study by Printing Industries of America on what benchmark profitability was. So I just took their number because I didn't want to make up a number and I wanted to start somewhere with a grounding in fact. So I've taken their numbers to, look at the profitability of compete. Now, thinking about digital transformation and this whole print industry, fortunately or unfortunately, I'm old enough to remember in the print business when we used to take actual film to a printer to the pre-press department to do the make ready, right? Start and get that ready. We had to have camera ready art in film format. And that was the first thing that got digitized in the print business, was that pre-press area. It really started to accelerate. The digital transformation in printers actually impacted the plant before it impacted the rest of the operation. So did pre-press, and then with HP's investment heavily in digital printing in 2020 and 2021, that really catapulted digital printing, which caused a lot of rework for printers. That the advent of digital printing presses had quite a huge impact on the printing industry, right? Now we're seeing, there's another study published recently that shows that the print industry is now looking at the digital transformation of their business functions, okay? So we're talking about, ERP, accounting, estimating, production, et cetera, how to digitize that, how to get that last mile of digital transformation through the print industry. Now, I will also say that we're also on the doorstep right now of another major, I think, impact to the print industry coming in the form of the Internet of Things, artificial intelligence, and 5G. We have a lot of data coming off printing presses today that isn't harvested in a way that impacts business decision making. So I think from a digital transformation and that continuum of digital transformation, there's more to come in the print industry. We're talking now really about a big push in the business aspect of digital transformation. And I think we have a little bit more turbulence ahead as we look at the impact of the Internet of Things and artificial intelligence. I also want to look a little bit at the challenges of the print industry. I mean, probably our single biggest challenge in the print industry is, there's a street price for everything almost, and we're cost plus based, right? There's very little sales and marketing effort from the print industry around value add. It's all cost plus, right? Cost based, right? And that poses challenges for us. And that's also one of the reasons that, EBITDA is actually below average industries, right? In this business. We also have a shifting buyer behavior. I mean, what's driving printers today is that buyers are highly internet driven. And prospects and customers expect immediate answers. And if they don't get an immediate answer from you on an estimate, they go somewhere else. They may go to 4 or 5 web-based print shops to try and get quotes, right? So the ability to quote quickly and accurately meaning we can make money on the job, is imperative today. That's one of the pinch points driving ERP adoption right now. We also have to look at the era we're in right now. We have pandemic-driven supply chain issues that keep getting worse every day. They're not getting better. They're getting worse. I know that there's a lot of emphasis on trying to dislodge that, but it's a bit of a problem that we have today. We also, if you look at recent inflation forecasts, it's climbing. We can look at the forecast, out in the next 2 years. If inflation continues, that means we're going to see a climb in interest rates. We're going to see other challenges emerging from our business or for the business here. Other challenges, and this is probably a universal one across all industries, but now more than ever, it's hard to find and retain talent, right? It's getting harder. I think that's going to be a continued problem, right? And the last challenge facing printers today, and probably at the very impetus for starting this drive towards enterprise resource planning systems, is the decentralized point solutions running every aspect of the printing plant. And if you look at the average printer today, they probably have 10 subsystems within their business, right? They'll have an imposition software, they'll have an estimating software, they'll have some pre-press, they're going to have some production software, some planning and scheduling software, some shipping software, some accounting software, maybe some reporting software, and more and more and more. Now that problem is at the very heart of the issue we want to talk about today. I'm going to share with you what I call a Rembrandt, right? Because this is an actual workshop diagram, right, of a printer, a multi-location printer and all of their subsystems. So we're trying to land the point here that, our challenge in print, we're cost-based, but the realities are we can't get to exact cost because of how we've architected our IT systems in the past. It's never been something printers focused on, right? But I think the next competitive landscape in the print industry is who can automate their business functions to get tighter view of cost. And you can see by this image here, if you're trying to get a direct cost, if you're trying to examine what I estimated versus what it cost me to run, and then look whether it's profitable at the end, it's going to be challenged to get that data out of a system that's built this way. This is the very problem we have with point solutions right now in the print industry. Now, thinking about that, because the absolute opposite of that is the net impact of what happens if you were to implement an ERP solution. So an enterprise resource planning solution, by virtue of definition, means everything happens in one place. In other words, like, the customers interact with the ERP solution. It could be by way of a portal to look at order status or invoices or other requests. Salespeople interact with the ERP solution. In fact, they could be driving estimates that estimators, built the logic for directly from the ERP system without actually even involving estimating in some cases. Estimating and quoting certainly lives in the ERP solution. The planning and scheduling lives there. The asset management, digital asset management can live there. Purchasing, production, fulfillment, if you have a fulfillment side of your business, all the way to finances. Everything is contained within the single database, meaning I can tell exactly how much it costs to run the job, right? Exactly how long it took us to win it. If we input all the information from a sales perspective, we can look at what our actual costs were. We can look at everything through one view of the business, right? And that's the real power of enterprise resource planning solutions today. And this is, if you go back to the Rembrandt, that's a problem. You can see how difficult it would be to extract data from there. Getting into the ERP solution, of course, it makes it a lot easier to get to the bottom line in the data. Now, let's talk a little bit about, managing costs, because I felt this is one of the more interesting slides in preparing for this talk today. And it's coming out of a presentation Dr. Ronnie Davis did, an economist for Printing Industries of America, looking at the cost of the average cut sheet print shop. And so when we talked about a 2.27% profit for Compete, that's where I took the number from, right there. Right? It just looks at how it breaks out the costs, selling, paper, factory expenses, other materials, payroll, etc. The interesting thing about this is that, if in fact we could have a 1% decrease in cost, we have a 43%, that's the inverse number, increase in profitability. So our business is not news to anybody. The business of the print business is highly dependent on cost controls. At the same time, the systems we built to control cost obscure the actual cost. So think about that, right? So the very systems we built to assist us in running our plants actually obscure our true cost, which also negatively impacts profitability. So I want to use that as a basis to jump into return on investment calculations and share with everybody just the return on investment calculation I'm using is just textbook out of the box. Net return on investment minus the cost of investment times 100% should give us a return on investment percentage. And that's the formula that we'll be using to look at what an ERP system could do. Now, thinking about this and thinking about the underlying premise here is that if management could see the cost clearly, could they control the cost better? Now, I would always argue that any well-run print shop with good management, and that's the bulk of the print shops today, could improve their cost if they could see it, but the very systems they have obscure it. But let's look at the impact of that, right? Let's just look at return on investment simply based on improving our ability to control cost, right? And so what I've done is say, if the revenue at Compete Printing is 25 million, if their EBITDA is 2.27, I've converted that to true dollars. EBITDA, if you're not aware of it, is earnings before interest, tax, depreciation, and amortization. It's kind of like the bottom line measurement before we apply other accounting factors to the business. And it looks like our net cost dollars. So remember, we're basing our hypothesis here of ROI based on our ability to control costs. We've got about $24,400,000 in costs in Compete Printing. Now, if we were able to save 0.5%, get a 0.5% reduction in cost across the board, and you have to ask yourself that question: would that be a big stretch for you? If your management team could see clearly all of the numbers in an instant when they wanted to look at them, could they control the cost better by 0.5%? Now, I would make the argument easily we could do 0.5%. If I was looking at my management team, clearly we could make that 0.5% difference, right? So if we take the 0.5% reduction in cost and compare it against, say, like I'm saying, a loaded cost for the first year of an ERP, so that's your services plus subscription, maybe at $160,000 for a company the size of Compete Printing, then our return on investment in year one would be 76%. Now think about that. So at the end of 12 months after you go live, that first year, you'd get an ROI of 76%. Now, if we contrast that, right now the stock markets year to date are roughly up 30%. And everybody thinks this has been a fantastic investment year, right? So that return on investment of 76%, it's over double, right? The return on the stock market in one of its best years ever. Return on investment calculation for a 5-year period, right, would look like 382%. Now, the reason I put the 5-year period in is because if we're buying a printing press, we would never measure return on investment over 1 year. You couldn't, right? You would never recapture your cost and investment in 1 year on a press. So look at it over the 5-year period. Now, for sake of argument, because I think 0.5% is really, that's a low ask for a management team. I also looked at, well, if we were able to reduce costs by 1%, then what would our return on investment be? Because I also think if you were to ask most management teams, ask your own management team, could you reduce costs 1% if you could see everything at a glance, right? In terms of, how we're doing on jobs, how we're doing on estimating, how we're doing on efficiencies of plant, et cetera. I think every management team would agree we could reduce it at least 1% and probably more. That ERP ROI in year 1 year after you're live, tumbles out to 153% return, right? A 5-year return at 764. These numbers are staggering. Like if we were going to make this kind of return in the stock market, we'd all be putting all of our money in, right? If we were sure we could get that back. The advantage you have of running the print business is you can control it. It is your business. You can get that money back. I also thought, okay, well, let's go out a little bit further. Let's look at a 2% reduction in cost, right? And where those numbers tumble out to. But it's still the same investment. Our return keeps getting bigger, and so our ROI keeps getting bigger. I mean, year one, after 1 year, we're going to get a 305%. That's 10 times the stock market, right? 12 months after. That's a pretty exciting investment. Like most of us, as individuals, if we could invest 160,000 to get 300% return in a year, we'd all do it, right? Yeah, and there again, like we're not talking about stock market. It's just when we look at return on investment calculations and percentages, these are staggeringly big numbers, right? But I want you to wait just 1 minute, right? Because there's a lot more opportunity when you're looking at an ERP investment besides simply calculating the ROI or the investment on it, right? So we could see that, we could conclude that investing in an ERP system would be self-liquidating. We invest the 160, we probably get it back in the first year, so we're neutral, right? But I want to talk about the other opportunities when making an ERP investment in the print industry, right? Because there are 5 big areas where we get payback, right? In ERP investments: working capital, increased revenue, cost reduction. We've been talking about quite a bit, so we won't spend a lot more time on that. We can reduce our risk in a lot of cases. And of course, we can increase our compliance, which is the inverse of reducing risk. So let's talk about cash for a moment. No one ever went bankrupt because of lack of earnings. It's always because they ran out of cash at the end of the day, right? You can't grow your business. We're talking about maybe adding a printing press because that means we're going to grow the business. We all know that if we run a print business, we can't grow the company without more cash. We need cash to buy equipment. We need cash to hire people. We need cash to expand our footprint. We need working capital to make that work. Now, the good news in most print businesses is there is additional working capital available, currently trapped in your AR, AP, and inventory. Now, that's also a symptom of those multiple point solutions. I painted that picture earlier with the Rembrandt, right? We have so many point solutions, we can't clearly see that. So with improved processes and systems, we can free up that working capital. Just give you a quick run through, quick example of what we look at. The print industry, companies consider, the working capital consists primarily of receivables plus inventory minus payables. That would give us our working capital calculation. And if we look at that from just a pure math perspective, in the example below, $1 million in receivables, $2 million in inventory, and $1 million in payables would give you a net working capital of $2 million, right? Not fancy math, but it's important that we just agree on the terms. So let's take a look at Compete and look at what the net working capital changes could be. So what I've done with Compete commercial printing is just look at, applying best practices to AR and AP, right? Looking at, reducing the number of days it takes me to collect my outstanding receivables and increase the number of days it takes me to pay. And that's simply because, that would be accounting best practices. You should pay in the same cadence that you collect, right? Otherwise, you dig a hole in your working capital. That's what it results in. That's what happens. Now, keeping in mind, if you actually have a shipping system separate from your collections, and this is, by the way, very common in the print industry, that means that your days sales outstanding, right, your AR balance is probably much higher than 50 days. Your accounting system might say 50 days, but it doesn't measure the amount of time it takes for you to manually re-enter or get the information from the shipping system into the accounting system to generate the invoice at first, right? So in our experience, printers tend to have a lot larger day sales outstanding than they think when you really look at it. But if we just match up those two things, right? A 10-day decrease in our collection period, a 10-day increase in when we pay, we generate a little over $1 million in working capital doing that. And we can do that because we're more closely matched in the accounting solution of an ERP system. Now, the other thing we would look at is inventory. Do we think we could reduce the amount of inventory we carry? Because now the same system that is responsible for purchasing and ordering inventory can also see exactly every estimate we're doing. Not only can we see estimates, but we could see the progress of that estimate. So that estimate, we went from estimate to accepted, and now we know that that's an accepted estimate, and we have, now we're working through the customer proofs and the rest of that stuff. So we know that job's going to go. Now we need to get inventory coming in to fulfill that job. So do we think we can improve that by 10 days? Probably, right? So if we could do that, we could do those three things, we would have a net working capital improvement about $1.9 million almost. Right. So that's just one example. So in addition to the ROI, which you'll get a big number on for an ERP deployment, you get to attack working capital, which assists all printers in growing. The other thing we would look at is revenue improvements. Do we think that we can increase revenue with a better, quote to order sales efficiency? Right. And keep in mind here, we're going to reduce response times. In other words, we're going to increase the efficiency of the sales operation, the quoting and estimating to get that all more tightly done. So do we think out of that we can increase revenue? Right. I also asked later on, can we actually increase the quota of the sales team? In other words, we won't need as many salespeople if there's less friction in the system. So theoretically, we should get more revenue per person when we're driving an ERP solution. The other thing to think about is, could we better optimize pricing based on computer-assisted estimating functions? There's a whole bunch of interest in how do we get out of our cost plus industry into getting better at optimizing value of what we're delivering, either based on time or other demands that are placed on us as the printer. So we think there's revenue improvements. I haven't factored any of that, by the way, but you have to ask yourself, what revenue improvements would I get if I had all this information at my fingertips always? We've talked a lot about cost reductions and controls, but what we didn't talk about is the fact that when you have the Rembrandt, multiple systems, multiple databases, that means you're doing a lot of manual re-entering, right? So you have a potential to eliminate some of the manpower or redeploy it. I don't like to think about eliminating because talent's hard to find. Think about redeploying it into more productive or more money-making activities, right? Because they're no longer required to do manual re-entry, if the systems are all tied together, right? You can look at lots of other benefits we could get: better buying power, because we get better inventory information, lots of things we could look at in terms of cost reductions. We also have to look at risk reduction, because a lot of the systems we've looked at, as we've looked to replace customers' ERP solutions, look at the solutions they're running today, a lot of those systems are old. They're in the 15 to 20-year-old range. And when that happens, right, when the systems get that old, they get brittle. When a system gets brittle, it could just crash. And if it crashes, it brings your whole business to its knees. So that's a big risk that most printers don't want to take, right? So think about the risk reductions of rip and replacing those solutions. You also can get better view in vendor and customer concentration risk, right? So you could have credit concentration with too much, credit with one customer. You could also have vendor concentration. Nobody likes to have a one-horse race, after all. And of course, there's benefits from a compliance as well. So, there's, compliance, it's almost what I'd say, ever entangling, compliance, whether it's government that's applying compliance to us with tax, environmental, various other sort of requirements that we have. Customers have compliance issues. You have to label the packages this way in order for us to receive them, or things like that. Lenders, if we have money outstanding with financial institutions, we have debtor compliance. We have investors in your business, they want to have financial reporting. And we have some suppliers that also want compliance in terms of use of their product or use of their materials. So there's a lot of compliance reporting that the ERP solutions, it's a side benefit, but that also brings to the party. Now, just thinking about Compete's investment in ERP, I wanted to take the time to summarize the impact. Most printers, when looking at a printing press or an ERP solution, would buy the press or piece of equipment first. But let's look at it. In summary, the ROI in the first year from a percentage basis is somewhere between 76 and 153%, right? If you look at the median dollar improvement in EBITDA, it came out to $244,000. That's a pretty good investment return if you invested 160 and got 244 back. If all you did was that in 1 year, most people would be pretty satisfied. That's a pretty good investment return right there, right? But it's better because, of course, that ERP solution will help you drive that EBITDA for probably a 10 or 15-year period. So you're going to get better at that, not worse. Right. So I didn't factor any of those things in. So the ROIs are already staggering, somewhere in the 5-year range between 382 and 764%. But that's not all, right? I think for the average printer, working capital improvements are significant. A printer the size of Compete, looking at 950 to 1.8 million in working capital improvement, I don't think that's out of the question. In fact, my argument would be that literally you could acquire the ERP system, deploy it. 1 year afterwards, you're going to end up with, somewhere between 1.2 and, $2 million in additional working capital, depending on how successful you are at cutting costs. And you're going to be in a lot better, a lot healthier position to make any additional investments. And of course, there's always the ability to increase revenue because you're faster at delivering quotes, because estimating can set up quick quotes, and then the sales team can deliver estimates based on what the estimators wanted directly to the client in the field. You've got a way to be able to dramatically increase our win rate between estimate and close, right? And that's an area that all printers could benefit from. So in winding up today, I'd ask you that question again, based on what I just told you. What would you invest in first, the ERP solution or that press? Now, my argument, of course, clearly you can hear from me. As a business guy, I do that ERP solution because the money I would save, the working capital I could repatriate, would probably cover the cost of that printing press, or at least make a really good down payment on it. So I want to thank you for taking the time, for joining us here today, joining us at the Summit All Up, and also for joining me at this talk. And always, you can reach me, georgeb@y.com. You can reach me there and ask me any questions anytime. Always happy to work through some ROI calculations with you. Bye for now.